What a week, right? I mean, we had volatility, travel bans, this emergence of this new variant, Powell dropping the word transitory. I'm just curious, how do you take stock of last week's price action as we try to understand what happens this week?
Yeah, last week's price action was obviously, pretty volatile. And one of the things that I look back at, and when you have volatile weeks, is, risk and volatility doesn't always equate to risk. So for investors right this time, is the best thing you can do is be patient, because a lot of new data, especially if you're mentioning the Omicron, new variant, a lot of data is still going to be coming that will change what's going to happen as far as the landscape of the economy. And so we have to make sure that we understand this new data as health officials still gathering more data on that. You mentioned the more hawkish tone from the Fed and retiring the word transitory. That actually still is going to have a play in the market, especially when we look at growth and tech stocks. What's going to happen with interest rates there on that side of things? If you look at tech stocks, they've actually held up pretty well over the past month in comparison to other sectors of the market. So patience is probably going to be a virtue here right now, Seema.
Although high flyers, many of which are in the technology space, sold off last week. Even a name like Tesla, which I guess you could call it as more consumer discretionary, down about 11%. I know you're a shareholder in the stock. Did you sell, or what would you be doing here right now?
So I did not sell. I'm still holding. I think there's been a lot of selling in Tesla. You mentioned, obviously, you saw Elon Musk has sold a bit as an insider of shares of Tesla, obviously for different reasons. But that's a stock that I think is a longer-term hold, not selling. And I'll actually be looking for opportunities over the next couple of days and weeks to buy if it kind of re-rates a little bit more. I think this is one that you're looking at a longer-term play here in Tesla. It's going to be a volatile stock. It always has been one. And this is obviously other areas of the sectors where they're having high growth areas. You saw some other high growth companies re-rate incredibly if you look at DocuSign and different areas of the market. So this is going to be an opportunity for investors to use cash that's been kind of built up over the past few weeks to look for these opportunities to pick at plays that have re-rated a lot more into really, really favorable valuations.
Over the weekend, Delano, we did get some early evidence from some studies that suggest this Omicron variant is less severe than the Delta variant. You had Anthony Fauci on the morning show saying this data is encouraging, that there's not a great degree of severity to it. How do you expect the market to respond?
Yeah, it's been interesting. So if you look at, what we saw when we first heard about the Omicron variant on Black Friday, where we kind of hear more data, the volatility index spiked. And if you look at the past 2 decades, 19 times that we've seen the volatility index spike over 40% in one trading session, we've actually seen the S&P be higher a year later 95% of the time. So the market has been really, really resilient when there's been information come that's kind of made a really quick pullback. And usually we've seen a fairly, steady bounce back afterwards. So I expect, if we hear new data, such as the data you just mentioned, that we see the market kind of be resilient and bounce back. So that's why investors could be patient. There could be a little bit more selling in the very, very near term. But I do see investors being resilient. As we mentioned, the S&P up over 20% over this year. So I definitely think that has to be in play here as well, Seema.
So what I'm hearing from you is you're anticipating a rebound in the market, but I'm just looking at sort of the big losses we saw last week. I'm curious where you see investors putting their work or buying the pullback. When Dow Transports, the Russell 2000, now down 12% from 52-week highs. Communication services now down 10% from its respective high.
I think there's areas in those sectors, when you look at consumer discretionary as well, that was an area that was performing incredibly well until we saw this pullback. And I think that's one area you were talking about cryptocurrency earlier. I think that's obviously an area where we're entering a bear market pretty much from all-time highs. And that's where I'm putting new money in, because I think that pullback is going to be, bottoming out here pretty soon. Investors have a little bit of areas to put money. And I think the sectors, as you mentioned, where you're going to see financials probably bounce back a little bit as well. Maybe the travel sector, if we get more positive news on the front of the new variant. So those are the areas that I'd be putting money, especially in the cryptocurrency area. I think we've hit a bear market there, and I think that will possibly bottom out pretty soon here.
Okay, we'll see if you're right on Bitcoin. Back to this broader sell-off. Every time this happens, you sort of see strategists come out with their shopping list. So JP Morgan came out with one. They released their best internet stocks to invest in at these levels. And they actually have Peloton and Uber on their list. And I'm just wondering, I mean, we've seen the year-to-date performance of both of these companies. Not so great. Would you be a buyer of these two stocks, especially a name like Peloton, which does sort of operate in that stay-at-home basket?
Interesting enough, Peloton, Uber, two stocks that I actually do not hold. And there's a couple of reasons why. I just, when you look at the valuation of Peloton, obviously during the stay-at-home, big turn during the stay-at-home play, that they benefited greatly from that. And since then, they've obviously had a little bit of issues with when you run into the Tread Plus. They've had issues with, obviously top line sales. And I think that's just a stock that I've never been, really keen on buying at this point. And I think there's going to be a lot that would have to change my mind on that. Same with Uber. So, kind of the ones that are re-rated. If you look at DocuSign, I still believe in the business outside of just being a stay-at-home play. I look at PayPal, obviously another area that's, had some struggles, but I think that stock is going to also, kind of have a bounce back. Those are the two I'd focus on more than if you're looking at Peloton and Uber at this point, Seema.